Hello everyone, this is Steve with the Free Bullion Investment Guide. Today is August 24th and I'm doing a review and outlook price analysis video for silver. This is silver's 4-hour chart, and to quickly go over last week's video, first off, I've been showing you this large rising expanding wedge. It's really not relevant as far as the price of silver goes right now. For the pattern to be confirmed, the price of silver needs to fall below it, and clearly right now that doesn't seem to be happening. There's really no pressure on silver for it to fall drastically like that. Right now it may get into oversold territory as it rises, but right now there's really nothing to bring it down to these levels. I also showed you this head and shoulders pattern, which also was a negative pattern, and I stated in last week's video that if the price of silver fell below 1687, it would confirm the pattern and continue downwards. But that did not happen either, so we can remove that. The other pattern I showed you was this bull flag. I was seeing small bull flags being taking shape in the price of silver, and clearly that's what's happening. We have this small little bull flag here, and then we have another small little one here, and each time we saw the price of silver move higher. This is, I believe, when the minutes of the Fed were released on Wednesday, and then on Friday we had the Chinese increase some tariffs against us, as well as Trump sent out some not so diplomatic tweets, and also urged American companies to get out of China. So that helped bring more uncertainty into the market and help move silver higher, as well as we had Jerome Powell's speech at Jackson Hole, which the market interpreted that we're going to see more rate cuts in the future. Really, it's hit or miss whether we do or not. I really don't think it would be very wise on the Fed's part if we don't see a rate cut, simply because of the yield curve. The yield curve is the 2-year is right now above the 5-year and pretty much close. It's either at or above the 10-year, and the 3-month looks pretty much parallel with the 30-year, which is not good on any level. So again, I've showed you this chart before. Back in 2006, we were seeing an inverted yield curve right here. You can clearly see, and this was back in October 2006. So, and we didn't have the crash of 2008 until I believe it started to happen in March of 2008, about that time. Yeah, around March, between October 2007 and March 2008 is when we really saw a drastic fall in the S&P and other large indexes. So let me get back to silver here. I actually found a negative pattern in the price of silver. It doesn't look like it's going to be anything drastic out of the price of silver. Maybe just a little bit of a showing that it's getting in oversold territory. We may see it. We actually may see the price of silver continue to trade inside of it, as well as maybe move down, confirming it, but mostly move sideways. But if it does move up, we do have 1750 as resistance, and above that, I need to move out to the daily chart and scroll out and show you we have 1775, which is the next resistance level above 1750. So again, for the outlook, I am showing a negative pattern. This is a rising wedge, but again, I think 1687 will hold like it did last week if the price of silver does fall below it. But again, there's a lot of uncertainty in the market, so we could clearly see this pattern denied, and the price of silver move up to the upside, breaking 1750. So really, fundamentals will trump, no pun, but they will trump technical analysis in the week to come, because of all the uncertainties in the market between the Fed, the trade war, and other new anything else that crops up in the market between now and next weekend. So anyways, that's it for this week's review and outlook. I thank you for your time. Take care and God bless.